Hey everybody, welcome to the morning market briefing. It's Tuesday, February 17th, 2026. Hope you're doing well out there. Hope you had a good weekend. Tom, Ben, all the boys back in the seats. How we doing?
It's good to have the full crew.
Yeah.
It's been a while.
Yeah, it's been a minute. Glad to be back. Lots to talk about. We'll get a full marathon recap at the end of the call. But Ben, let's jump in. Looks like activists getting moving here.
This is an interesting story, and because it's in the travel space, which is something that a lot of investors, and particularly big name investors, try to avoid. Warren Buffett famously said he would never invest in airline stocks. But Elliott, led by Paul Singer, is going after Norwegian Cruise Lines for its underperformance, basically saying that the stock has dramatically lagged Royal Caribbean and Carnival Cruise. The CEO resigned immediately, effective immediately on Thursday. He's going to be replaced by John Chidsey. Elliott is not happy with this guy. This guy led Subway from 2013 to 2022, which I don't think Subway really rose to prominence over that period. Kind of more like faded to oblivion. I mean, Subway signs even now seem just kind of faded and archaic. To an extent. I did see one at the airport, which was interesting. It actually kind of smelled good, but I didn't want to eat there. But Elliott previously ran an activist campaign at Southwest Airlines in 2024. Stock's up 90% since that time. So it'll be interesting to see if they can get any traction here. And then Starboard Value, which is a big activist shop, they are going into TripAdvisor. And it's only a $1.1 billion company now, which was crazy to me. I thought TripAdvisor was at least 10 times as large as that. It has fallen 45% in the past year. I think that this is kind of their exit strategy. We have a 10% position in this thing, and we don't want to own it because people are just going to have itineraries that are built on ChatGPT from now on. And so I think they're trying to get a little bit of an activist push and maybe try to sell the company, because how else are you going to unload a 10% stake in a company like this?
TripAdvisor might be the worst website on the planet.
It's very 2006.
Yeah, like you go on there and
like they made it on Zynga.
Yeah, it's awful. So I don't know if that's worth anything. Every time I Google something and it sends me to TripAdvisor, I'm just like, no thanks.
It's really clunky. We should have prearranged to do like a screen share, and we should start doing website tours.
Yeah.
Start just rating the aesthetic of the website. But I mean, I'm pulling it up right now, and I mean, we've got like 4 columns of information, none of which I'm looking for.
I have used Viator before, Viator.
It's a blood pressure drug.
Ask your doctor if you're healthy enough for it.
It was useful to schedule like tours when we were in Florence, for example, and
Friends.
But it was incredibly clunky and not easy to use. It's a classic case of one of those sites that a lot of Europeans use that no one in the world is going to use in 3 years.
Yuck.
No thanks. Let's talk about the bond market a little bit. When we had the Market Symposium, our annual event a couple weeks ago, one of the hot takes presented was the opportunity that bonds might actually outperform stocks this year. And Tom, we're living that reality.
Yeah, so far so good. And continuing in today, I mean, over the weekend we saw an enormous push into bonds. The 30-year right now sits at a 466, which is the low point for the year. We're down, call it 29 basis points from the high this year, which you start doing the bond math, you basically take 0.29 and multiply that by 16, and that's going to be your return. So you're going to be somewhere in the 4.5 to 5% range, depending on your coupon, year to date on the long bond. The market itself is up, depending on which one you look at. If the ag is up about probably 160, and the ag is up about 120. The muni market's up about 160. I mean, we're seeing a really strong push, and we're annualizing, somewhere in the 15% range on bonds. I don't think that's going to hold, but I'm tending to think this might be the beginning of the end of high interest rates, just because we're seeing inflation just crater. I mean, we're seeing it really fall off the board. Trueflation, I think right now is sitting at 43 basis points.
Yeah, it's so low.
We talked about the inaccuracy of the housing number and CPI. It's just a matter of time. And I think if you look at how interest rate cut expectations are changing. I think that jobs report was shrugged off entirely. I don't think that people thought the numbers were accurate. They haven't been accurate, and until we see those numbers start to be a little bit firm in terms of what they actually are, if that's reality, then I think that people will pay attention to those more. But inflation is coming down. Rate expectations are now 2.5 for the year. We know that's about a half cut more than we saw at the beginning of last week. And we're just seeing tremendous demand for bonds. In the 10-year, sort of the lodestar, we're sitting at a 402 now, which is about as low as it's been in the last few months. And I don't know that it goes much higher. I think 410 is sort of my fair value now. But
is that the new home base? If it was 420, are we now at 410? I
would definitely say 410 now with the way inflation's going, and it may actually be lower than that. 4 might be the number now. So, I'm kicking myself because I know that it's the only thing I've talked about for 6 months, that we didn't buy enough long bonds, but we've been doing it all through. As the market's been rising, we've been taking gains on equities. We've been putting that into the long bond. Those are doing very well. I just worry that we don't have more duration than the market, and we're going to, in the short term, underperform because the bonds that are making the most money are going to be the longest bonds. We have plenty of them, but we don't have it across the book. We still have plenty of treasuries we bought 2 years ago at 5%, and you can't spend spread. So you can't. We're not going to see a ton of upside on those short bonds. If you think of it like a doorstop, that's the most movement is going to be at the end of that doorstop. That's going to be the 30-year treasury. There's going to be very little volatility right there up against the door. So we just need those bonds to roll off and continue to plant them in good spots.
And it's the way that we manage fixed income is classic kind of buy and hold. We know what we're buying, and we feel good about what we're buying, and we continue to hold that for a period of time. Where it gets tougher is if you're trying to make a massive switch at a big turning point. We do have, kind of a satellite portion of the fixed income, call it 10 to 15% of a given portfolio. Some clients is higher, some clients is less, where we can make a more tactical call. And oftentimes we use ETFs to do that. But if you think about it this way, I mean, if you make a big call and just buy 20 to 30-year treasuries or corporates or mortgages and buy the underlying CUSIPs there, you're locked into that for good or for bad for a very long period of time. And so from a portfolio management standpoint, we can tilt one way or the other, but it doesn't make sense to dramatically shift. It's a lot easier to shift short than shift long, because when you shift long, you're making a call not just for this year or next year or the year after, but for the next 20 or 30 years. And so we can tilt that way, but making a big call for 20 to 30 years, that's really, really huge to make. A lot of hedge funds try to do that. A lot of hedge funds blow up, and that's not what we do.
I mean, you could also say we're locked in for 30 basis points of outperformance until 2054, right. 2052 on some of these. And, 30 basis points a year doesn't sound like much, but when you compound that, especially over a pretty low bar, which is fixed income performance. I mean, if you're, say the average for the last 30 years has been 3%, but you're getting 3.3 every single year because you bought that bond at a wider spread, you're really compounding over time, that piece of the pie. And not only that, but you're adding in the 5% treasuries bought. Some of these corporates, which up until last week, we were getting in the 540 range, like Hyatt hotels. I haven't looked to see where they're trading this morning, but I would imagine they're not trading at 540 anymore, because that would be a massive spread to the 2035 treasury. So it's suffice to say it will come through, but we always talk about how bond portfolios are planting pinewood forests. It takes time. The difference is we're going to have bigger, stronger trees in 25 years that no one can touch anymore, but it's going to take a long time for that to really filter through to performance. And when you have really sawtooth moves in the bond market, you're going to see that in index much faster than you see it on the underlying securities.
The thing that I love about what we're doing here in terms of the overall portfolio is that the dynamics of the portfolio are working exactly how, knock on wood, this is kind of how we draw it up, is that if stocks, have a little bit of a tougher time, more volatile time as they've had the last couple of weeks, and round back to flat on the S&P 500 for the year, then you're making up for it with the bond performance, because the bonds are going up while the stocks are mixed to slightly down. And that's how we can kind of remain fluid, which is not something that took place in 2022 when both bonds and stocks fell. But because of where rates are now, that dynamic's working really well. And the way we've structured the bond portfolio is that we can use that income to reinvest into stocks as they become weak.
That combined with just market breadth on the equity side, I think has teed us up nicely through the first 6-7 weeks of the year, in the sense that not everything we do works. We're not claiming that it does, but the general strategy and the rationale behind the strategy is very much aligned with market dynamics that we're seeing right now. In talking with clients, I think the general view from clients is, wow, how this market's been so volatile. The reality is, year to date, it has not. It's gone nowhere. But there has been intraday volatility. There has been sector volatility. There's been volatility within individual securities. Individual companies have moved significantly. But if we're doing in-house research and trying to pick the best ideas, it's created some dislocations, which in general, I know clients would rather be up 10% on their stocks so far year to date. But in terms of adding value from what we are doing in the portfolios we're trying to curate, it's been a pretty good environment for that.
Oh, it's been awesome. I haven't been more excited in a long time for what we do heading in this environment. The market's down 2.5 basis points. I can tell you, I don't know if we want to talk firm-wide performance, but we're doing much better than that on a total portfolio basis. I mean, it's the best year I've had in equities in a long time.
Let's get fired up. Let's talk AI a little bit, Ben. We're starting to see a bit of a gap and divergence in terms of what some leaders in the AI space are doing and how they're allowing their technology to be applied. Anthropic says, hey, we're going to put up some guardrails. We're going to make sure AI is not used in specific ways, specifically for government purposes. And ChatGPT is saying, man, we got to get some profitability here somehow.
Yeah, I mean, I think the Super Bowl ad kind of summed it up. Anthropic saying ChatGPT is just going to load you down with ads, and we're better than that. And now Anthropic saying, you know what? The government wants to surveil people. They want to use AI to, for fighting without even humans being involved in deploying weapons. And the Pentagon saying, well, you know what? We might have to reevaluate whether or not we use Anthropic. And right now it seems Anthropic might be okay with that. Meanwhile, ChatGPT is saying, hey, if you want to use our open AI for anything, we are ready to do business. And they today is saying, instead of what Anthropic's doing in terms of using its Claude AI to create new tools and widgets for end users to almost disrupt the existing space, whether it's in truck brokers, we saw it last week, or legal purposes, drafting wills, etc. OpenAI is saying, use our foundational learning models to create your own AI agents. So OpenAI basically saying, you know what, we need to make money here, and we're going to do it however we can, even if it means selling a little bit of our soul. Anthropic saying we're not going to do that.
I mean, they're saying that Claude was boots on the ground in Venezuela. There's the headline this weekend that Claude was one of the active service members involved in the Venezuelan heist. So I don't know if that's the first time that's ever been disclosed, but I mean, look at Reuters. U.S. used Anthropic's Claude during the Venezuela raid. That's from February 13th, 26. I saw that over the weekend and thought, man, now we've got digital soldiers.
Yeah, you can't kill them.
Man.
We've got part of the Strait of Hormuz being closed down. As I feel like we're getting a lot of noise. I don't know if we're getting any actual signal on Iran.
There's no signal. I just wanted to make sure that everyone who listens to the call knows that we are aware of this. And, they've been talking about closing the Strait of Hormuz ever since I've been in the business. I remember in 2011, the first week or two that I was working, I was watching CNBC, and they were saying, they're going to close the Strait of Hormuz. They're going to close the Strait of Hormuz. Oil's going to go to, I don't know where oil was trading at the time, maybe $80. It's going to go to $160 a barrel, all-time highs. And it didn't. So I don't think Iran's going to do anything. They're talking in Geneva. I think it's just a non-story.
I mean, Tupac once said, there's war in the streets and there's war in the Middle East.
Yeah.
Instead of war on poverty, they got a war on drugs, so the police can bother me. Still true.
I thought you were going to keep going. We've got a couple CEOs in the crosshairs right now. United Health CEO Stephen Helmsley apparently he's made some private investments that may or may not create conflicts of interest with his position at UNH. I don't think we have a lot of detail on that.
Yeah, the Wall Street Journal had this big article. So basically, after he was previously CEO at UNH, he then started his own financial advisory business. And as part of his financial advisory business, he made private investments in healthcare companies that also did business with UNH. When Helmsley was not employed by UNH, and then he took the CEO job after the other guy got canned, and he, and now it's a conflict of interest, which I guess it may be, but I think it's very, very thin in terms of what they're trying to go after him on, which begs the question, why did the Wall Street Journal feel compelled to put all these resources into a massive, long article here? And I think that this is not coming from the Wall Street Journal. I think someone tipped them and said, we need an article on this to take down the UNH CEO.
Luigi? Are you saying Luigi's dropped a dime
Yeah.
to the Wall Street Journal?
Luigi let him know. Meanwhile, Hyatt Hotels losing 75-year-old chairman Thomas Pritzker, cousin of J.B. Pritzker, notably.
Is he
apparently?
Really?
Yeah.
Interesting.
I don't know anybody else named Pritzker.
I'm pretty sure that's right. Somebody fact check that. But apparently this guy had a little bit too much contact with one Jeffrey Epstein, even after the 2008 plea deal. I feel like we're going to see more of these stories.
Yeah, Goldman Sachs losing someone to that.
Yeah, like chief legal counsel or something.
Her emails were spicy. There were some spicy emails.
As we look ahead to the week, we'll get the Empire State Manufacturing Index. Tomorrow, housing market reading tomorrow. We'll get Vulcan. What's top of mind? We got some earnings still trickling in, but a little bit of a quieter week.
I'm excited about analog devices tomorrow morning. We're seeing some pickup there. I'm concerned that a lot of it's priced in. We're seeing a little bit of weakness out of Vulcan this morning on their earnings report, and then we have the Q4 GDP number on Friday. But I think the biggest number is going to be Walmart earnings on Thursday morning. I think that's going to take a lot of the headlines. And then obviously what ends up happening with Warner Brothers Discovery and Netflix and Paramount, because that's back in the headlines again.
I can confirm he is J.B. Pritzker's cousin. And the involvement with Jeffrey Epstein subheader on his Wikipedia.
Not good.
Not good.
No.
Very tough. So
yeah, I don't.
This is not the forum for it, but go look at it yourself. It's yeesh.
Ben had a big weekend. Changing subjects. The Mesa Marathon. Benjamin Nye. 2:51:07 on the chip time. Needed to break 3 hours to qualify for Boston. An 87th overall place, 82nd among men, 13th in your division. Let's hear it for Ben. Clap sound effect.
Pretty strong.
Pretty incredible, man.
I was it was a beautiful race. It was downhill for the first half marathon, which was really nice. Last 4 or 5 miles was a little bit of a grind. Definitely slowed down a little bit there. The 250 pacer was behind me the entire time until mile like 23 and a half, 24, and then he just he ran away from me.
There was another Nye out there, by the way.
Yeah.
Dr. Derek Nye.
Yeah.
Kevin Ford, slow and steady, finished right behind you in your division. Trailed you by about 17 seconds. But I don't know if you've looked at his splits. He was a little more consistent than you, and I think he was trying to hawk you down, and I think we got a patented Ben Nye sprint at the end to hold him off. Is that what happened?
Yeah.
I definitely, stepped on the gas a little bit in the last 0.2 miles, but my legs were heavy by that point. The time where I really kind of ran away from people was in the first, 4 to 8 miles.
Ben was flying.
It was, I felt good.
Underrated.
Downhill.
I just pulled you up on the results here. There was a woman named Tiffany as well. If you type in Ben NYE, you get Nye, Benjamin, and you get York, Tiffany.
I want to give a little credit to some AI software out there that I was unfamiliar with until just a moment ago. But there's a race recap powered by Laurel Intelligence. And this is what it has to say about Ben's race.
Ooh.
Consistent start follows with gradual pace decline. Benjamin Nye demonstrated a strong start in the 2026 Mesa Marathon, maintaining an impressive average pace of 6:18 minutes per mile over the first 10 miles. Ranked fourth in the men 35 to 39 division during mile 1, he managed strong positioning in the top 10 throughout the initial segments, evidencing his early race strategy of starting at a competitive pace. The first split was completed in 5:54, highlighting his impressive speed right out of the gate. As the marathon progressed, Benjamin's pace began to decelerate slightly, with his splits ranging from 6:29 to 7:16. His overall finish time was 2:51.07, translating to an average pace of 6:31. Although there was a noticeable decrease in speed in the final stages, Benjamin's ability to maintain an overall strong pace across the 26.2 miles is commendable. Continued focus on sustaining speed in the latter stages of the race could bolster future results. So if you're looking for some strategy, they want you to go fast the whole time, not just fast most of the time.
I thought the AI definitely, because I saw that too, and then I compared with a few other guys who ran it.
Are
It
they
was,
pretty much
it
the
was, it was
same?
pretty much the same. Like, hey, guess what? The last 6 miles tend to be a little bit slower than the first 6.
I'll tell you what, I'm looking at Tiff and I's situation here on the AI, and it was not as nice. But her average was between 9:45 and 10:20, except that she really fell off at the end. To quote the AI, after mile 20, her pace began to slow significantly, reaching a pace of 15:38 in the final mile. That's tough. She just absolutely, I mean, yeah, it was like 9:45, 9:47, the last one, 15:38. She really hit a wall there. So shout out to Tiff and I. It was a long day. Her 5 hours and 8 minutes. She was out there for twice as long as Ben.
That is so long.
That's brutal.
I mean, not that I could be faster, but that's a long time out there.
I've never done any form of exercise for 5 hours and 8 minutes.
No. I am curious what it says about the last place finisher of the. We got a lot of DNFs
This is good
here
pod.
at the bottom.
This is
We
good
got a
pod.
lot of DNFs. I'm going to keep digging in here.
I think the person who's most relieved.
A staggering amount of DNFs.
In the half marathon, Derek Nye did pretty well, and also Onaima Okolataku also. But I mean, Derek Nye is pretty similar pace, 6:55 for his half marathon. So
All right, here we
you
go.
guys must be related.
I'm not going to use this guy's name, but we'll call him Bob. Consistent performance with strategic efforts. Bob completed the 2026 Mesa Marathon with a total time of 7 hours, 36 minutes, and 5 seconds, maintaining an average pace of 17:24. The first few miles showcased consistent pacing, with mile 1 starting at 10 minutes and 8 seconds, and mile 5 being 12 minutes and 57. He achieved a surge in place during mile 12, moving up significantly with a split of 15:03 and placing 44th in his division at this point. But
How old is Bob, though?
58.
Yeah. Man, 7 hours. That's a long time. That's a long time. Hey, credit to him, though. I've never run a marathon, nor do I care to.
Yeah, I don't know that he ran a marathon either. I think there's a lot of, I would say, walking pace stuff, which is awesome, and I'm happy for Bob. All right, we'll wrap it up there. We will be back on Wednesday, and we will. If you have anybody else that has achieved something impressive athletically that you would like us to mock, we'd be happy to do so. So, Bob, if you're out there listening, feel free to come on the show and defend yourself.